Michael McGlone, Senior Commodities Director at Standard & Poor's in New York, joining us now. Thank you so much for joining us. We're looking at this huge fall in the price of copper. Does this indicate to you that we really are in the middle of a rout now in raw materials prices?
Well, and the bottom line at S&P is we make indices and we measure markets, but a lot of times from those markets you can glean pretty significant information. So certainly when the price of the world's most significant industrial metal, Dr. Copper, is declining significantly, it has severe economic implications. But if you look back historically, the correlation between the industrial metals and things like the S&P 500 is quite low. But if you look at the correlation between the S&P GSCI Industrial Metals Index divided by the Precious Metals Index compared to the S&P 500 or GDP, that actually has a much higher correlation. And that is significant because that ratio is actually at or below the 2008 low.
Now, is that because we've obviously seen a big boom in the prices of gold and silver? We've had record highs, but even it's been under pressure in September. There is a big difference, isn't there, between the precious metals as a safe haven and the raw materials?
Well, exactly. You mentioned precious metals. You can store them on your finger, and when you buy precious metals or invest in precious metals, it's usually for store of value purposes. And industrial metals are obviously used for physical reasons, i.e. construction and so forth. And so there's an indication there, but I think the significance really is the last year, certainly since QE2, there's been a major flight to the precious metals, and I think that's also indicative of investors are just not, they're looking for alternative forms of investment, and it's not financial assets as much.
No, we've seen the price of copper falling, and the last time that happened in 2008, it really tracked production in manufacturing in China. This time it's actually ahead of the fall. Does that suggest to you that maybe it's overblown?
Well, I heard your previous viewer mention oversold. Copper is down on the year. Copper, S&P GSCI Copper Index is down at around 27%, and the vast majority of that was in September. So 1 month is really not a good way to indicate, I think, oversold or overbought. We don't really measure oversold or overbought. We try to just look at what are the implications. And the implications certainly are not positive.
Traditionally, the implications, though, would be positive for consumers when there is a decline in commodities. Is that translating this time around, or is it too early to say?
Yes and no. Unfortunately, number one, it's too early to say, but unfortunately the answer is really no, and it's not really translating. Let's look at the commodities in the context of 2009. Basically, the year started out with energy really leading the way. And remember, early in the year, equities kind of underperformed as energy spiked higher. And now we're seeing kind of the implications of that, the impact of that. Global GDP is declining, partially because energy prices really spiked. But the significant difference, I think, is in the past, when energy prices really declined, the developed countries of the world would benefit, i.e. consumers would benefit when the most significant commodity for consumers, unleaded gas, declined. But that's the problem this year is unleaded gas, certainly in the United States, unleaded gas is up on the year. And on a 12-month basis, the S&P GSA Unleaded Gas Index is one of the best performing single commodity indices in the GSCI. So if that index were to decline significantly, if unleaded gas were to decline significantly, certainly that would help consumers, but it really has not happened so far this year.
Okay, Michael McGlone, Senior Commodities Director at Standard & Poor's in New York. Thank you very much indeed for joining us.